Welcome back. By now you should have your compliance in place and you should be ready for the next part of your legal department. The goal of this video is to take a look at a brief management model to manage your financials in the business. This is absolutely vital. Obviously, if there's no money in your bank account, you've got no business because you can't make any payments, you can't keep the operations going, you can't pay salaries, you can't invest into marketing. The list goes on. It's something that needs to be managed so very carefully. So I want to encourage you to always be in control of your finances, always be in control of your cash flow, and make sure that you improve yourself in this department of your business. So there's a couple of areas we're going to take a look at when it comes to financial management. And in my opinion, this is the most basic structure you need to follow to make sure there's order and control. Number one, income. So when it comes to the income of your business, you want to know exactly that the pricing model is set up for sustainable success going forward. The pricing model is what we did in Module 1, as well as we touched a bit on that in Module 2, where you make sure that you work on the formula to get a profit goal percentage-wise that you can be successful in the long term. The second area where you need control in your financial area is your expenses. So I want to encourage you to keep your expenses as little as possible. Don't be fancy. Don't buy fancy offices. Don't rent fancy office space. Don't buy fancy office equipment. Only purchase what you really absolutely need in the beginning period of your business. Keep your expenses bare minimum as possible. I want to also touch on the expense of marketing. So there's a lot of clients that's come to me in the past that doesn't want to pay any money for marketing, and I always find that mind-boggling. I don't understand it. It's a very simple principle. If there's no seed in the ground, I can't expect a harvest. So you got to change your mindset when it comes to marketing from an expense to an investment. Marketing is actually reinvesting into your own business for more foot traffic and more business coming your way. It's such a serious matter that in my business, I'm willing to pay up to 20% of cash flow or turnover that's coming into my business. I'm reinvesting back into my business in the form of marketing, 20%. But by doing that, I know that I've got seed in the ground and I can legitimately expect business to come my way because I'm putting myself out there for the world to see. Another example I want to touch on here when it comes to your expenses is to justify certain personal expenses at SARS. Now it's a very fine balance, and I know as entrepreneurs and business owners we want to be on the right side of the law, but we also want to put as many things through as possible that's justifiable when it comes to SARS. I want to encourage you to not take any personal expenses through your business, but rather pay yourself a salary and take care of your personal matters out of your personal bank account and take care of the business matters in your business account. That's very important. The third area in your financial management is your daily and monthly recon. Now, as a rule of thumb, as a principle, I literally do recon every single day. Even though I've got zero, which I'm personally using for my business, I still log into my bank account on a daily basis, capture the income, capture the expenses on a Google sheet, because I need to get into my bank account. I need to be aware of what my cash flow is every single day. I can't take it for granted. So I want to encourage you as a business owner, you need to be in control of the cash flow, and the best way to do that is to every single day log into your bank account and take note of what's going out and what's coming into the business. Very important. The fourth thing when it comes to financial management is your salaries. How do you work out salaries for your employees and for future employees? My suggestion is, if you're looking to appoint somebody or employ somebody, start with a lowish basic that the person can prove themselves, and then after 3 to 6 months after they've proven themselves, then you give them a more permanent position in your business. And if you want to know it's a viable decision to employ somebody, the best way to go about it is to take that projected salary that you want to give the new employee and take a look at your last 6 months, the figures. Hopefully there is the best months in those figures, the worst months, and the middle or average months. Put that salary now into those monthly turnovers and ask yourself, what would the state of the business have been if I used this real life data for this employee? Would I have gone under? Would I have gone over? You know where I'm going with this. That now is a realistic way of managing salary expectations, because you are using real data to figure out if it's a viable decision or not. I'll always suggest to my clients that you keep the basics fairly average, but always go with a bigger commission structure when it comes to salaries. Commission basically motivates your employees to put in more effort, because they know the more they put in, the more they get out. As a rule of thumb, my employees, all of them work on commission based, so it's a very average basic, but there's a good lucrative commission base that they get, which means everything they do becomes visible for them to see on their payslip at the end of the month. And then lastly, how do you check your sales targets and make projections for the following times and the years that's coming in your business? It's a very simple formula. You got to be realistic. So first of all, you need at least some statistics to work with. So let's say you've been operating for 6 months and you see month 1 we're at 10,000, month 2 20,000, month 3 30, 40 month 4, 50 month 5, and 60 month 6. So let's say that is now your projection. Now you can accurately say my business has grown with X amount for the last 6 months. That then gives you an indication of what you can expect for the next 6 months. So when it comes to financial projections, I always look at my realistic data and then I use that to predict the future. If I've got a full year's data that I can measure with my second year, then I get an average growth percentage, which means I can then add that growth percentage for year 3's figures, and now I've got a very accurate, realistic goal that I'm driving towards, because it's based on real life data. There you have it, guys. In a nutshell, that is my important take when it comes to financial management. I'll see you in the next video.